Hi everyone, Billy here from Trade Prosper, and welcome to Section 10, Video 2, an introduction to options. Using options as a trading instrument allows you to dynamically express your view, and you can construct instruments or trading strategies far more flexible, which allows you the luxury of not always having to call the market 100% right. Buying options also comes with a limited risk. You will never ever lose anything more than the premium that you laid out at the beginning of the trade. But first, let's relate this to a concept that you are already familiar with. How do you protect your car against unforeseen events? Car insurance, right? So let me ask you these three questions. Why do you take out car insurance? Is it because you know you're going to bump your car? Or is it as a protection mechanism in the odd event that you do bump your car? The second question would be, do you have to use the insurance now that you have it? Or is this something that you will only use when you really need it? And the last question I'll ask is, was insurance free? And if not, what is the premium used for? In the case of car insurance, it's very easy to understand that you are paying for a month's worth of protection on your car. So every time the installment goes off against your bank account, you've bought time for that month. So in other words, for the next month until my next premium is due, I have protection that if my car gets damaged, I can fix it without incurring any additional costs. Now this is exactly the same with options. When it comes to vanilla options, there are only two types of options we have to worry about. A call option gives the buyer of the call option the right to buy the underlying instrument. And similarly, a put option gives the buyer of the put option the right to sell the underlying instrument. Now what is important is you'll notice that I said the right to and not the obligation to. An option therefore allows you the ability to control the underlying instrument, or shall we rather say the exposure to the price movements of the underlying instruments, but only if that price movement is in your favor. That is a fantastic place to be in. In other words, if the market doesn't move in your favor, all you do is you let your option expire worthless, and the worst thing that would have happened is that you've paid your premium. It is important to understand that options are very versatile in their use and their application, and as such the true value cannot be explained really by just saying use an option when you want to and let it expire when you don't want to use it. But for now, the purpose of this intro was just to give you a very quick introduction as to what an option is, and we will focus on the more in-depth sessions in one of our other trading videos. So now that we've covered the introduction about what are options, our next video will cover call options. Speak to you then.